Datavault Inc., trading under the ticker symbol DVLT on the NASDAQ, is currently sitting at 0.72 USD, reflecting an intraday dip of 0.0050 or roughly 0.69%. Now, if you were looking at that price action on your Fidelity mobile app or tracking the ticker through Robinhood stock trading, you might see a stock that looks like it is just treading water. But here is the thing that the broader market is likely missing right now. Today, the company announced a massive exploratory agreement with Sports Illustrated to build a digital asset exchange for athlete name, image, and likeness rights. Usually, when a microcap company drops a name as heavy as Sports Illustrated, you would expect the price to behave more like Nvidia stock during a chip shortage, but instead we are seeing a muted, almost skeptical reaction from the street. This creates a fascinating gap between the narrative expectation of a massive rally and the reality of a cautious wait-and-see market. It's easy to get caught up in the hype of the big names. When people use investing sites or browse their individual brokerage accounts for high growth potential, they often look for the next big thing in AI. The common belief about Datavault AI is that it is just another penny stock trying to ride the coattails of the current tech boom. Investors often see the sub-$1 price point and assume the company is struggling or lacks a concrete path to profitability. However, when you look closer at the actual mechanics of what they are building, the reality is much more complex. This isn't just about branding, it's about the architecture of how digital assets are valued and traded. While most people are focused on the volatility shown on their SoFi trading platform, the real story is in the infrastructure they are laying down with partners like IBM and now Sports Illustrated. The recent movement we have seen in DVLT has been a roller coaster, to say the least. Over the last week, we saw a significant surge followed by a pullback, which is typical for a company with this kind of volume. For those of you who use the Robinhood app or are active in SoFi investing, you probably noticed the massive volume spikes earlier in the month when the stock climbed toward the 90-cent mark. Much of that momentum was driven by the acquisition of API Media Innovation, which was meant to bolster their media infrastructure. Yet the price action today remains subdued. Why? Because the market is digesting a huge amount of institutional selling. Specifically, Silex Holding has been offloading millions of shares. When a 10% owner dumps stock at this scale, it creates a ceiling that is hard to break, no matter how good the news is. It's like trying to run a marathon with a lead vest on. The fundamentals might be pushing you forward, but the technical pressure is holding you back. If you are managing your own portfolio through interactive brokers trading, or perhaps utilizing the automated features of Schwab Intelligent Portfolios, you know that technical pressure usually overrides sentiment in the short term. The reality is that despite the Sports Illustrated news, the market is worried about dilution and the heavy net losses the company reported in their latest filing. They missed their earnings estimates by a wide margin, posting a loss of 33 cents per share when analysts were looking for something much smaller. This is where the tension lies. The expectation was a lean, mean AI machine, but the reality is a high-burn tech firm that is still in its aggressive expansion phase. Let's talk about what this company actually does, because it has changed quite a bit since its days as WISA Technologies. They've split the business into two main sections, acoustic science and data science. The acoustic side is what most older investors remember, spatial audio and wireless sound technology. But the data science side is where the real potential for a high-value investment sits. They are using high-performance computing to create what they call data experiences. This involves taking real-world assets and turning them into digital tokens that can be tracked, valued, and traded securely. This is a massive market, and while companies like Apple stock or Tesla stock dominate the headlines, smaller firms like Datavault AI are trying to own the plumbing of this new digital economy. Their partnership with IBM for the Watson X platform is a great example of this. They are trying to give enterprises a way to value their internal data without compromising privacy. If they can prove this model works, the current market cap will look like a rounding error. But again, the risk is real. Those using the Robinhood Investments platform or Fidelity brokerage accounts need to realize that this is a high-stakes play. The company has a current ratio that is a bit tight, and their cash reserves are not exactly overflowing. They are relying on financing and share issuances to keep the lights on while they scale. This is the classic struggle of an early-stage tech firm. Can they reach a self-sustaining revenue level before the capital runs dry? The Sports Illustrated deal is a perfect litmus test for this. The goal is to launch a commercial platform in the second half of 2026. That's a long way off in the eyes of a day trader on a SoFi trading platform, but for someone looking at online investment for the long term, it represents a clear path to high-margin licensing revenue. They aren't just selling a product, they're selling a platform that takes a cut of every transaction. That's the kind of business model that attracts serious institutional interest over time, even if the current retail sentiment is shaky. When you look at the Fidelity trading platform or use Interactive Brokers' fees as a benchmark for your trading costs, you have to ask yourself if the current price reflects the potential of these exchanges. They aren't just doing sports, they're looking at biotech, real estate, and even political data. The information data exchange they have built is designed to be compatible with the NASDAQ financial framework, which tells you they are thinking about institutional scale, not just a niche retail product. This is why some analysts, like those at Maxim Group, have put a $4 price target on the stock. That's a massive upside from the current 72 cents, but it requires everything to go right. Comment below how many shares of Datavault AI you currently hold, or if you think the Sports Illustrated deal is enough to overcome the selling pressure from Silex. It's always interesting to see how the community views these microcap AI plays compared to the safer bets like Fidelity mutual funds or the massive liquidity of NVIDIA stock. As we look toward the future, the catalysts are clear. We have the launch of the NIL exchange, the expansion into Taiwan Research Center for asset digitization, and the ongoing integration with IBM's cloud infrastructure. Each of these represents a chance for the reality of the company's revenue to finally catch up to the lofty expectations management has set. They're guiding for significant revenue growth in the coming year, but they have to prove they can execute without further diluting the shareholders who are buying Robinhood fractional shares or investing through their Fidelity IRAs. The risk of a strong sell rating from some technical analysts cannot be ignored. The stock is currently trading below its 200-day moving average, which is usually a red flag for those who rely on self-investing strategies. However, contrarian investors often look for this exact kind of setup, a company with solid IP and big-name partners that is being beaten down by temporary technical factors like insider selling. If the Silex selling eventually exhausts itself, the downward pressure will lift and the stock might finally be able to react to the positive news flow. For those of you who prefer a more managed approach, like using a SoFi robo-advisor or a Fidelity wealth management service, a stock like DVLT probably isn't on your radar because it is too volatile. But for the individual brokerage user who likes to take calculated risks, the story here is of infrastructure. It's about who owns the tools that will value the digital world. Datavault AI has over 70 patents protecting their tech. Patents don't always translate to profits, but they do provide a moat that is hard for competitors to cross. The contrast between the penny stock label and the quantum secure AI platform reality is where the opportunity lies. Most people using online investing tools will see the 0.69% drop today and move on to something else. They will look for momentum in Apple stock or search for investment help with more stable assets. But the authoritative view is that these quiet periods where the news is good but the price is flat are often the most important times to pay attention. The market is efficient over the long term, but in the short term it can be incredibly moody, especially with a stock with a smaller float and high institutional turnover. In summary, Datavault AI is currently in a tug-of-war between its ambitious technological goals and its harsh financial reality. The expectation of a breakout fueled by the Sports Illustrated partnership has been met with the reality of heavy institutional selling and past earnings misses. Yet the underlying business is transitioning into a high-margin licensing model that leverages deep partnerships with some of the biggest names in tech and media. Whether you are using the Fidelity mobile app, the Robinhood app, or the Interactive Brokers platform, the key is to look past the daily fluctuations and focus on the execution of the digital asset exchanges. The potential for a massive shift in valuation is there, but the path will likely be as volatile as the tech itself. Keeping an eye on the volume and the completion of the Silex selling will be crucial for anyone looking to time an entry or exit. As always, use the tools at your disposal, whether that is the Fidelity trading platform or a SoFi active investing account, to stay informed. The digital asset space is moving fast, and while big tech gets the glory, it is companies like Datavault AI that are building the actual foundations for how we will trade value in the years to come. The tension between what the company promises and what the market believes is what makes this one of the most interesting tickers to watch right now.